Okay, welcome back to the Caribbean Business Review. My name is Joseph Cox, and today we have our special guest, Dr. Patrick Antoine, and Patrick is the CEO and Chief Technical Director at the CARICOM Private Sector Organization. And as you hear that, I mean, CPSO has been in the news so often nowadays. It's really difficult sometimes to pick a topic just to have a conversation because their reach is wide and the effect is clear. But Patrick, we want to talk to you today about trade. Trade, as well as we had some recent developments in terms of free movement. We also have to look at it within the context of like treaties and how we're really moving forward with this sort of thing. But let me start with trade with you as I welcome you to the program. All of a sudden, the CPSO and the World Bank, I believe, put out a study that said the region will be faced with something like 540 plus million loss based on what's going on in terms of the tariffs and the change in dynamic. My first question to you is, given all that has happened subsequent to the publication of that study, are the assumptions still holding? Is the information, because it's such a fluid environment? How should I interpret the data emanating from that frame?
Well, thanks a lot, and really, it's always a joy to be discussing these matters with you because I think they're so important to the community, and any opportunity that we have, I think, to share perspectives that will help to give the private sector some direction and also governments some perspectives from the private sector on how we view things. I think it's pro-community, pro-CSME. At the end of the day, that really continues to be the voyage that we're on, which of course has two components. And the question that you've raised actually spans the two components. The first component being how we sort of engage in production and trade amongst ourselves. And of course, the second dimension is how we engage in trade and economic relations between CARICOM and the rest of the world. And our principal trading partner is the United States. So here's the thing. Very succinctly put, are the assumptions still valid? The assumptions that we made in the analysis that we did as part of the expert working group with the CARICOM Secretariat, the CDB, and the World Bank still hold good. The way that we have done the model allows us to make some assumptions, whether it's 10% or zero. The interesting thing for those listening, and why I think that the model gives us some pretty solid answers based on what was announced as reciprocal tariffs, is because we had a situation where the trade that we engaged in with the United States before under the CBI, I'm using the CBI as a catch-all for the Caribbean Basin Economic Recovery Act and the Caribbean Basin Partnership Trade Act. The CBI collectively allowed us to export into the United States duty-free for most of the tariff lines. There were a few exceptions. So the data that we have actually captures how the duty-free trade with the United States look. And the reciprocal tariffs allows us to then put on top of that, in a unique setting, what would 10% look like? And in measuring what the 10% looked like, we were able to double check that. Young people will say double click against what we were seeing emerging. And we're pretty confident that what we have seen emerging is very close to what we estimated. And it's not often that economists get an opportunity to look at the policy situation is with and what it is without having to simulate it in the abstract. And so, because we have this sort of quasi-abstract, but quasi-realistic way of looking at it, the estimates are pretty solid. But your question was, look, is it still valid given everything that's happened since? So we've had announcements by the administration in the United States, which, quite fleetingly suggests that they may be looking at imposing tariffs a little above 10% on, broadly, generally speaking, with a wave of the hand is how it came across to me, the Caribbean countries and the countries in Africa. And the other thing that's happening is that there is a biannual review of the CBI, operations of the CBI, for beneficiary states taking place at this time. This biannual review is every 2 years, where the USTR, United States Trade Representative's Office, does this sort of economic, technical, and trade analysis with some other criteria to make a report to the Congress on whether, in fact, the countries have been, on how the countries have been performing under the CBI. So what we have done in this unique setting is that we've been able to make a submission by the regional private sector, which looked at what trade under the CBI looked like, but we were also able to report on what the results of that trade was beginning to look like without the CBI preferences. Very interestingly, that allowed us to use the biannual sort of reporting process to make the case that the CBI preferences, now that the reciprocal tariffs were on of 10%, that the CBI preferences were really important to the states in the Caribbean, the beneficiary CBI states, which would be all of the states that you know, except for Suriname. And that allowed us, I think, to put a unique position, which we hope that the administration begins to listen to. And that unique position, which has not changed, is that the United States has a trade surplus with CARICOM. Of all of the countries in Latin America and the Caribbean bloc is a bloc for which the US has sustained a trade surplus for the last 2 or 3 decades. In Jamaica's case, there's probably 1 year since 1965 that there wasn't a trade surplus very early, which the United States did not maintain a trade surplus with Jamaica. For the rest of the region, the OECS countries are small service economies, and we continue to hammer that point. And if there's one point I want to make today, because I know my colleagues in the US at technical level and certainly in the embassies and the missions listen, it is that CARICOM is in a different position. What the US is trying to achieve with the rest of the world, they've already achieved with CARICOM. And pushing the envelope more in terms of tariffs with CARICOM and will disrupt supply chains. It will disrupt investment and employment patterns. And it will certainly cause the US trade surplus over time to diminish, because the countries will have no option but to look for alternatives. And that is the hardcore economic story. It's not ideology. Yes, it has nothing to do with a shift from the perspective of the Caribbean countries from one set of, let me just say, ideological leanings to another. It is pure hardcore economics in which our private sector is intrinsically and indispensably up to this time joined with the private sector in the United States. So yes, the study is still very much valid in the context of what has happened since. And your program must make the point loud and clear in Jamaica to those who would listen that we need the CBI preferences. And then there's a but.
Well, what can I say? You're right. There is a but. But the other aspect of it, for where we sit thus far, is it that the companies, because, well, contrary to the narrative pushed in the States, it's the actual importing country that absorbs the tariff, that you have to get the tariff. But is it that the purchasers of our exports, our regional exports, is it that they have been by and large absorbing the tariffs, the new tariffs, or have they been passing it on? Because one is kind of mindful. There's been a lot of stock taking, inventory, pre-purchasing that's going on as people try to hedge their bets against the tariff, the changes in tariffs. But at the same time, that can't last forever. So from where you sit thus far, are we seeing that kind of, is there the transmission mechanism straightforward, or are people absorbing the tariffs, or what's going on?
We're seeing 3 discernible patterns. The first pattern is there are some sectors, and we don't want to name them yet because the guys are still talking, for which the purchasers are saying, we can't absorb any of this because we have prices going up elsewhere, including internally, and so you guys have to bear this. You can imagine if our products are competing with similar products from other parts of the world, and they have more headroom to go down in sort of prices to adopt or adjust to the reciprocal tariffs, then of course we're going to lose market share. I'm giving you all that in one mouthful, because it means that although there's this sort of price adjustment taking place, there's also the competitive pressures. That's one type of adjustment where the guys are saying, we can't do this, you need to take all of it. And we have had some industries and sectors where they've had to reduce their prices, and hence their earnings have been reduced as a consequence of the reciprocal tariffs. The second pattern is where we have some sectors saying, look, to be fair, we know this is as hard on you as it is on us. Let's go 50. And I can tell you, I can actually call one of the sectors broadly because there's so many exporters from CARICOM, it's not going to indict anyone. It's fish and fish products. For fish and fish products, we've seen sort of that Solomonic split between the purchasers and importers and the exporters, right? But we've not had the reverse. We've not had any instance where the US guy is saying, look, I will take all of it. You don't worry. We've not had any of that. And that's a measure of where the net impact will be. The net impact is certainly going to be on our side. Yes, the impact is on the purchaser in the United States, the consumers. And at the retail and distribution level, we've also spoken to a couple of the entities that, that distribute, that engage in the trade, the supply chain, at the domestic level for goods that are sourced in the Caribbean. A lot of them are actually showing quite a bit of resilience in terms of trying to adjust margins so that they don't pass the full impact on to consumers. You're absolutely correct in what you said. That can't go on forever. And so we expect that the full effect of this, we have sort of estimated that because distributors and retailers don't want to be adjusting prices every week or every month, they're waiting to see where the president settles with the next round of discussions, negotiations even with the countries, and where the tariff settles before they ultimately move to a price level that's going to be sustained. So we expect some more adjustments coming from that. In the meantime, more diaspora in the US, a lot of them consuming Caribbean products, have been one of the first groups to be hit, right? You think about a chap who, although he lives in the United States and, his patterns are still largely Caribbean. So he still buys yellow yam, he still buys a lot of the products that we export from the region. They're the ones that are seeing sort of the adjustments taking place a little more rapidly for Caribbean products. I want to be clear, because there are other countries which are going to have, it appears, tariff levels greater than 10%, right? So all of that shaking out, and all people are also consuming some of those products. So, all told, it's really not a good time for Caribbean economies and for Caribbean people, because on the other side, clearly on the import side, I know you'd want to go there, there are also some implications for us, not just on exports, because our study has focused heavily on exports in the first instance, but we already know, because we've been talking to the Caribbean Hotel and Tourism Association, we've been talking to importers, we already know that in some countries, right, we've started to see some effects on the import side. But I wanted you to just get a good sense that on the export side, we're net losers, and that the incidence of this is that our revenue is going down and the price split. And where it takes place is 50-50, but we don't have anyone taking the full hit. We are taking the full hit in many instances.
So in terms of, all right, for some of the countries in this region, because one of the levers that we always had would have been exchange rate adjustments, if you want to go that route. Politically, I'm not sure if that is a feasible option for most of the Caribbean, to be honest with you. But from a practical standpoint, how many effective levers do we really have in treating with this current dynamic as a region?
I think we have a couple levers that we haven't leveraged yet, but it's going to take speed of adjustment, decisions, and deliberate leadership by heads, because I am speaking first and foremost, when I mention speed of adjustment and political decision by heads, to the opportunities within the CSME. There are large opportunities within the CSME for us to displace, and we've actually done the analytical work on this in the CPSO, to displace imports. Not all of it, but there are 300 and something product categories that we've recognized there's an opportunity to displace imports. Now, interestingly, a lot of these still depend on intermediate inputs from the United States, to be clear.
Of course.
Which is why I said that we are so coupled in our trade and production systems. But at least there's value on top of that where we can get more production, more trade, more employment, more investment. There are some products, which is the second category, which is the second sort of scope that we have, the flexibility you've asked about, which is to source from other countries. There are countries that are in this hemisphere, and we've been looking at some of that as well. We have to, because there's some industries that are going to be so hard hit. Those that essentially use a lot of intermediate inputs that pass through the United States. And this is important for your listeners. About 19% we've estimated of the imports that we actually, demand in CARICOM, that they pass through the United States, but they don't originate in the United States. Other colleagues have estimated between 10 and 12%. We've looked at a number of other parameters to look at where that quantum is. But even if it's 10 or 12 or 19, it means that quite a bit passes through the United States. And so if the US tariffs, for instance, on the Philippines or on China or some other country is greater than 10%, it's going to impact us by even a larger degree than we now see, which is where we have a 10% across the board, sort of, except for some steel products from China and some exceptional products from Canada. So for those products, we believe that there are opportunities to import from other countries in Latin America. Some of them, we found there are good import opportunities in Brazil, in Mexico. We found good export opportunities for some of these products in Costa Rica. Interestingly, there's some Caribbean countries some Caribbean, though non-CARICOM countries that we've looked at, and we are surprised that the extent to which they can displace some products from the United States is not very large. But we shouldn't be surprised when we did a double think, because their trade and production systems are quite similar to ours. They're competitive, right? But that work's been undertaken. But the sort of takeaway for your program is that the second opportunity is for us to source from elsewhere. And I think the third opportunity in terms of what we do with the monetary and fiscal instruments, certainly on the fiscal side, there's a little adjustment that we can take, knowing that it will have an impact on revenue and the government's expenditure on economic and social programs. So that's really a tight balance. So we're not seeing that as a long-term fix. On the monetary side, sure, you can get some short-term benefits from exchange rate adjustments, but that will dissipate over time. It's fleeting, particularly if it's not anchored in the first area of flexibility I spoke about, particularly if we don't see the response at the CSME level, right, in the short run to actually fill the gap. It's going to be fleeting. So I think the region's in a very difficult place where we have to make some deliberate decisions. And one of those decisions, to my mind, that is most important is for us to get rid of all of the barriers to trade, so that, for instance, Jamaica broilers, Caribbean broilers and others that see opportunities where small volumes are imported by small countries from the United States can themselves do that and really engage, knowing that there are no non-tariff barriers that they have to mount. And we've seen that it's a time for us to, which is why I spoke about political leadership, right? And then there's another thing we need to do if we want to really have the adjustments that you spoke about to compensate for this. And that's on the labor side. All of the countries have labor problems. It pains me when I look at the agricultural sector and I see so much of the agricultural sector that depends on labor availability, right? Essentially, going wanting. We can't sustain production. Volumes are falling. And in some cases, crops are on the tree because we don't have labor, right, to harvest or to sustain production. And so you have some unemployment in some countries. You have underemployment in other countries, and we're still hithering and tithering. We've had some bright spots, just bright spots recently, but that's really been a big humbug for the private sector. So all of this goes right back to what we need to do. And if anything, I don't like to say this, but the reciprocal tariffs are forcing us to do some things we should have done anyway. It's just making it more urgent. And unfortunately, it's come to this, but I'm not celebrating it, nor am I recommending it, nor am I holding it up as a flag. I think as developing countries, it is certainly, it upends the trading system, and it certainly undoes in a very vicious way a lot of the sort of patterns of, concessions we've granted to developed countries, to our markets and our people and our resources and so on. So I'm not holding it up. I'm just making the point that it now behooves us to do that which we ought to have done all the time more rapidly.
Yeah, no, fair point. And therefore, as you raise the issue of the labor, I take it into the other aspect of it that I wanted to raise with you. And that is in terms of the recent announcement about free movement of labor within the region. Now, Patrick, I'll be very honest with you. I'm one of those people who I view that announcement as just an exercise in incrementalism, because I don't see, to be honest with you, after 40 years, I don't see why we're still speaking about the skills certificate. We're still speaking about all of these other issues, including basically what some of us would argue is almost the structural exclusion of Haiti from this free movement exercise. And when I juxtapose it against what is said now, about in terms of the agriculture, your need for workers, etc., etc., we still operate in a suboptimal way. The obvious question then is, are we really serious?
Yes, Joe, it goes right back to my first point, speed and urgency. I have to tell you that one of the first points that the private sector rallied around in accepting the call to form a CARICOM private sector organization in 2019 when they met in Port of Spain, one of the issues that rallied every single executive that was invited to that meeting from every CARICOM country,
Right.
the rallying cry was, if we could get one thing, just freedom of movement of persons in CARICOM achieved, this organization, as they saw it in 2019, would have achieved this objective. Yes, we want to achieve more. But if there's one thing we all want to see, is this freedom of movement regime. And so we have been on pause, urging, but being politically polite.
No,
in not upsetting
Yeah.
the policy process and the political process that heads tell us. They have to balance delicately internally. Notice my language is deliberate,
No,
because I want to
you.
make sure that I represent my colleagues properly. This
No,
is
man,
my
I get you.
executive committee.
I get
But we have every single year called for full freedom of movement. And the private sector believes that once persons enter the economic space that is the CSME, and they do so in pursuit of economic opportunity, and they can demonstrate that, we ought to let the regime function. We need to let the regime determine when wages are high enough to attract people, because people are intelligent, and the working conditions as well. And if we do that, we think we're going to have a CSME that makes sense. What we don't think is going to continue acting in our favor is where a young engineer has to wait 6 months. And let me tell you that I can speak to this with authority and passion. Young Grenadian engineer comes to Trinidad and Tobago or Barbados, and he thinks, because he's read the thing and believes that with a certificate, so he gets it, that he can enter one of these countries and apply for a job and work, as they would say in the small islands, joke making. He then has to submit this certificate so that it's verified. And that verification process, right, which has certain steps in there that are similar to the process he went through to get the certificate in the first instance in a couple of the countries. That process can take a month, 2 months, right? But in many countries, he can only do that. I want to be clear, and I can speak to this because we're going to document it after he gets a job offer. But to get the job offer, concretely, they need to know that he is able to work. And so if the employer isn't flexible, you're caught in this sort of time warp. And my colleague at the CARICOM Secretariat, when I was explaining this to him, He was a little bit miffed. So I actually gave him evidence of the case we're talking about. And after that is done, then he goes back and he gets, the authorities to say, yes, you can work, and he's able to do so. I'm leaving out the steps about poor young man not knowing that, believes that he can stay in the country and look for a job, takes him 7 months to get the job, and when he gets it, he finds out from the authorities that he's overstayed. Exactly. I'm not going to go into those murky waters. All I'm saying to you is that I'm appealing to the community that we cannot continue to treat our young people this way. Let me juxtapose this for you, that this same young man, under President Trump's policies, can leave school, get a job, and be working inside of a month, as he was. Yeah. But decided that he wanted to come back to contribute to the region, and he was really, bound up in this, this euphoria of a united Caribbean, and that's what we're facing. And I'm just making the point that it's not just what we do in CARICOM, is that our young people are finding that whether it's in the UK, or in the US, or in Brazil, or in Costa Rica, or in the other parts of Europe, that the facilitation that they have to work and to move is a lot easier than in the countries and the region in which they were born. And many of them are still very strongly associated. So it's more than just an economic thing, right? What we're facing is a situation where our civilization and our heads have to understand that we are discouraging young talent. Exactly. And we can't intend to build a serious society rapidly if we continue with this. So we applaud Barbados and Belize and St. Vincent and the Grenadines and Dominica. We certainly applaud it. But we think it is a parsimonious approach like you. We think we need to move more rapidly, and we've actually called on full free movement by the 31st of December. And this is after we had commitments before, only to say that we're not fighting with governments. We just know it is good for business, it is good for the society, and it is good for building our Caribbean civilization. We're very clear on that as a private sector.
But Patrick, the obvious question, we just won't have to wrap this up, but the obvious question is simply this, that one, first of all, because not just those four countries that obviously, but what we're looking at is a scenario where one, you have the local content legislation out of Ghana, where they got a 5 to 7 year exemption from this process, which frankly speaking makes no sense, because it can be argued that part of the challenge with the local content legislation out of Ghana is that it's actually in breach of the Treaty of Chaguaramas. And then from the other standpoint, from the OECS countries, where there is absolute free movement between the countries, between the members of the OECS, because they are members of CARICOM, under the MFN clause, the most favored nation clauses, their right for should have been passed on to all the members. So I, for the life of me, don't understand what the hell are we talking about, what we're arguing about, and what we're negotiating. Because it becomes, if somebody mounts, I would dare say, if somebody mounts a legal challenge to this, people will find themselves in problems, because I don't know how you can then argue on both sides of a conversation.
Yeah, I think we do have a few contradictions in the single market. I think the contradictions, we have to move more swiftly to work them out. I think some of the frustrations that the smaller partners, LDCs, particularly the OECS, feel with the process are nothing but, if you wish, avoidable grumblings that a single market must find a way to get around, and we're not hiding this. We feel, for instance, not just the freedom of movement of labor, which you're absolutely correct on, and I'm saying that has to work itself out, and they need to huddle and do this. But from the small countries' perspective, the fact that when they trade goods in certain of the big markets, they can't get paid is a major issue. And I have to say that, lest it be taken as a political comment, it's not. In the study that we did, which is still, you were there, it was your shop that commissioned the study, where we looked at business facilitation in the CARICOM. This foreign exchange restrictions was picked up as one of the big non-tariff barriers. And we actually used the, classification systems just because we wanted to be sure that everyone understood that it was rules-based and rooted in a sort of a methodology that was well understood and well accepted. And this is since 2017, 2018, that study. So when Prime Minister Gonzalez and others bring it up today, it is real. And I make the point just as we wrap up that it is so real that it's actually slowed down trade from those countries in terms of their exports into CARICOM. And it is so real that the impact is greater than the impact of a 10% reciprocal tariff from the US. And I will tell you that we've measured this. If you export, for instance, and you can't get paid along the official exchange rates and you have to buy at a premium, you're paying between 15 and 20% up on the premium, right? If you're lucky, right? That, of course, if you're trading an agricultural product where you're working with margins at 25%, you are not even treading water anymore, right? Because if you take spoilage into account, and we've said this, and I'm saying it because I want to be clear that we have to find solutions to these things. A spoilage rate of 7%, and you put it on top of that, you're underwater.
You're underwater,
so the traders have done what the economists don't need to tell them to do. They've stopped trading because it's unprofitable.
Yeah.
And so I think that's an easy fix because the central banks can get together and put a pool of funds together easy. It's not a lot, 10 million US dollars. And to engage in it, you must be an agricultural exporter or an exporter from those countries into this country. And so what they do is they take the currency domestically and give them the US dollar, and it just circulates. It's not a hard problem. And I think we just need to have the politicians get together, or heads get together, and find some fixes to these things that are nothing but humbugs to the integration process. Now, everything we talked about when you started this on the America First policies and what we could do, I doubled down on the fact that we need to drive intra-regional trade. But I finished by saying that if we don't fix freedom of movement and we don't fix NTBs, including foreign exchange restrictions, and we don't fix some of the other nuances and disturbances that attend to the process, everything I spoke about in terms of getting the opportunities and countering what is in fact going to be the impact of the America First policies in part or in whole, and we would not be in a position to do. And so we've come full circle with this.
The conversation continues, Patrick Antoine, as I thank you very much for your participation today. Patrick Antoine, who is the CEO and Technical Director at the CARICOM Private Sector Organization. Patrick, as always, it's always a pleasure to speak to you, my friend. Thanks so much.
Joe, to you and your team, thank you for having us, and we look forward to being back when you invite us. Cheers. Have a good day.
You too.